Hello good people, it's me Kumanawa, your money manager. Today in this video we are going to talk about savings. We're going to try to understand what savings is. We are also going to look at the different events or the things that we save money for, and we are going to unpack the three different types of savings account that are available out there, particularly offered by commercial banks. So first things first, what is saving? What exactly is saving? I find that a lot of people, we don't understand what savings is, because savings and investing, we normally use this word interchangeably, but they mean totally different things. So let's look at into saving. What is saving exactly? When you save, you are putting money aside for future use. That's exactly what saving money is. You put money aside for future use. Underline that, putting money aside for future use. There's so many different events in our lives that we save our money for. Four broad categories that we need to discuss. First, we save for unexpected future events. Unexpected future events. These are emergencies. I mean, like, life is just a mystery. You'll never know when you are going to be hit by an emergency. So you save money for that, so that when an emergency strikes, you do have liquid funds that you can tap into to address that emergency. Normally with emergencies, an emergency is something that you need to respond to very quickly. It's very important and it's very urgent, because the more you take time not responding to that thing, it's more likely that the problem is going to expand or is going to balloon out of control, and you're going to end up spending more money to fix that problem or to fix that event. So you need to be responding very immediately. You need to be responding immediately. Number two, we save money for expected future events. Expected future events. You are expecting this particular event to happen at some point in the future, therefore you can plan for it. You plan for it by putting money aside, so that when that future arrives, you do have the money ready to take care of that event. That's like a wedding. A wedding, guys. I don't understand why we treat a wedding as an emergency, or why someone would even go and get a loan for a wedding, while a wedding is an expected future event. More especially, I mean, if he proposes to you, then you know that a wedding is going to happen at some point, and you do have full control over that event, therefore you can plan for it. That's number two, expected future events. Number three, we save for discretionary spending, our wants. We save for our wants. The things we can live without them. However, we want them at some point. Therefore, we can save for it. Our wants could be things like a vacation. I mean, you can survive without a vacation. Therefore, it's a want, and you can plan for it, and you can save for it. That's a discretionary spending. It's a want, not a need. A lot of us, we cannot distinguish our needs and our wants. We're taking everything and assuming that everything is just a need. Yet some of the major things that we spend money on are purely wants that we can do without. Number four, we save money for building assets. Building assets, this is investing. You are building assets because you want to create value. You are building assets because you want income in the future. So you save for that because you understand that for you to start investing, you need to accumulate some money first. And how do you accumulate that money? You accumulate that money by saving. Deliberately, intentionally saving for investing. And investing, you're going to do what? You are going to build assets to create value and to create income in the future. These are the four main events and things that we save for. Now let's look at the different types of savings accounts that are available out there. I'm just going to give you the three broad categories, and then you will go out there and look at the account, and then you can classify it according to these three types of accounts. The first type of account that is offered by commercial banks is what we call a regular savings account. This is the most common types of savings account offered by commercial banks. With a regular savings account, there is flexibility in terms of the frequency frequency of putting the money in the account and also withdrawing the money out of the account. Normally, yes, some regular accounts are structured differently across different banks. Some would give you like free number of withdrawals, and then thereafter, after that, they will start charging for extra withdrawal. However, you still do have the flexibility of putting money in and taking money out when you need it. Normally, regular savings account, they will come with a debit card. That's one of the distinguishing factors of a regular savings account. It's a savings account, and yes, it will come with a debit card. I'm sure you can identify some of the regular savings accounts that are available out there. I don't necessarily have to give you an example. Yes. Number 2 is what we call contractual savings accounts. Contractual savings account, like the name is saying, is a contract. It's a contract to deposit a fixed amount at regular intervals. It could be monthly, depositing maybe 100 pula on a monthly basis. That amount is regular, and normally there is an agreed time period of when the contract is going to run. What you need to understand about contractual accounts is that you do have an obligation to fulfill. So once you try to walk out of that contract before the expiring date of the contract, you are going to be charged a penalty interest. Different banks have got different ways of calculating that penalty interest. So you need to understand as you open an account what the penalty interest is going to be and how it's going to be calculated on your contractual savings account. That's number 2. Number 3 is what we call time deposits. So what are time deposits? The difference between time deposits and contractual savings account is that time deposit, you are depositing a lump sum for a fixed period of time. So time deposits are basically your fixed deposits account, where you can have a 1 month fixed deposit, 28 days fixed deposit, a 91 days fixed deposit, a 3 months fixed deposit, 12 months fixed deposit, and even 24 months fixed deposit. It really varies across all these different tenors. So like a contractual savings account, a time deposit also, if you try to break out of that time deposit or fixed deposit, you are going to incur a penalty. I mean, if maybe you fix the money for a period of 12 months and at the 10th month you realize that there is a need for that money and you want to terminate that fixed deposit, you are going to be charged a penalty fee. So as you open your time deposit or your fixed deposit, you also need to get an understanding of how the penalty is going to be charged or how the penalty is calculated. Now that you understand the different types of savings accounts that are available out there, I'm sure you are in a better place to choose for yourself the proper account where you can park your money for your different savings goal. Let's go over an example. With an emergency saving fund where we are saving money for unexpected future events, you've got no control over these events. They can happen anytime, and because you've got no control over these events, you need to make sure that when you save your money, you are using an account that will give you that room for flexibility, because you don't know when the emergency is going to strike. So I normally say that I would rather go for a regular savings account for my emergency fund, and maybe if I've built a big or a sizable emergency fund, I would consider splitting, putting some of the money in a regular savings account where it's immediately accessible, and then putting some of the money in a money market fund account. A money market fund account is now going to force me to look outside banking, to go maybe with the unit trust providers where they do offer money market fund accounts, and that's where I will put my money, because now I want this little money to give me a better yield, because my emergency fund is big enough. There is enough that I've kept in my regular savings account, and then part of it I am keeping in my money market fund. And the beauty about the money market fund is that this also is very liquid as well, or there's easy accessibility. Normally you just give a notice and then within 2 to 3 days you can access your money. But remember, here we've done a split. some of the money is in a regular savings account, and some is in a money market fund. And then your all other events, because now all these other events, when you are saving for expected future events, when you are saving for your discretionary spending, when you are saving for building assets, you've got full control over this savings or over this event. Therefore, you can decide on either a contractual savings account or a time deposit, because normally you would know when you are going to require their money. And also your income will also dictate sometimes or help you in terms of choosing or selecting which form of account you are going to place your money in. Example, if you are saving to further your education, you know exactly when that event is going to happen and you know how much you are going to need. So therefore, you can go for a contractual savings account or you can go for a time deposit, depending on the time when you are going to need the money. Maybe you are going to need the money in 12 months. Then a contractual savings account or a time deposit will make perfect sense rather than just putting the money in your regular savings account. Because what you need to understand is that a regular savings account, normally you are not given an incentive. Normally the interest rate is very, very, very low, like in the regions of 0.01, somewhere there, very low interest. Why is the interest rate very low on your regular savings account? Is because of that flexibility that you are being given. So for that flexibility, you are not being compensated enough. But when it comes to your contractual accounts and your time deposit, normally the interest rate is better than what you can get from your regular savings account. So if you're saving for your expected future events, look within contractual savings accounts and time deposit and pack your money there. But for your emergency, just go with a regular savings account and then maybe a combination of regular savings account and a money market fund to pick up some yield. Because if it's big, like you have 120 or even 60,000 as in your emergency fund, maybe you could do a 50-50 split where 30,000 is in a regular savings account and the other 30,000 you are keeping it in your money market fund. See, this is what savings should be all about. So today I'm not going to touch about or give you examples of all these different savings accounts. I will create another video where I'm going to share with you all the regular savings accounts that are available in the market. I'll also show you the contractual savings accounts that are available, and also and touch on the time deposits and the fixed deposits accounts that are available out there that you can start using for your different saving goals. This is all that I wanted to share with you today. I hope that you find this video insightful and it will help you in formulating and finalizing your savings plan. As we look into ending the year and welcoming a new year, we should be reviewing our different saving goals, making sure that we are ready for the next year. Please don't forget to leave a like for me, leave a comment for me, and don't forget to subscribe to my channel. Thank you very much for watching. I will see you in another video.